Well, good afternoon, everyone. It's about 4:30 here on a very wet and blustery afternoon here in West London. London's certainly not as normal this afternoon, and I must admit to feeling much saddened by the passing of our Queen. In fact, much more than I would ever anticipated. But to business, the S&P is up 51 points. And the primary wave in VectorVest is turned up, so we are in a situation where we've got an up-down situation. The short-term trend on VectorVest is up, underlying trend is down. Now, those folk that follow the VectorVest bottom fishing technique may already have decided to take some positions because, as you can see, on September the 6th we moved out of what is not quite by the textbook a mega oversold situation, but my word, it's a tick or two away from it. So and there are some videos done by the VectorVest education people on bottom fishing technique. If you go to the VectorVest US YouTube channel, you should be able to find those quite easily. I haven't done anything as yet. I normally look at a medium-term market timing system to get into the market. I'll show you that in a second. So if we do, in fact, let's go there now. If we have a look at the VectorVest composite of the US, and the UK is in pretty much the same place. We had a very good day today in the UK. On I think Monday or Tuesday, I pointed out these two levels in the market. I felt that a close below this high would in fact be a closing overlap, and that we would move down strongly from this point. But the level is held, and we've moved up very strongly indeed. And as you can see, we actually, on the VectorVest composite, we had a gap down and a gap up, which is a darn good sign, because that would be classed as an island reversal. On the chart I've marked the red and green triangles refer to that medium-term market timing system that I referred to a second ago. It's called the DEW. I'll spare you the acronym, but it hasn't got that much to go before it triggers a buy signal, but not today. Well, unless something happens quite miraculously before 9 o'clock tonight. If the market should close above this level, that in fact would confirm that this was not a corrective wave, but this was an impulse wave, and we actually have got much more upside. So let's wait for that. I shall be looking at positions. I've got quite a few stocks that I've been looking at, but I'm going to wait for the market to tell me it's safe to get on board. So if we now have a look at, I've got, I think as well, the intraday chart open. That's the intraday chart of the SPX, the S&P 500, where I do my best to make a living and have been doing it for quite a long time. I met up with some VectorVest customers yesterday, and they asked me how did I go about trading the S&P 500 short term, and I had to be honest in that when I do trade a 5-minute chart, it's normally because I'm bored. If I had 100% rigid discipline, I would leave the 5-minute chart alone and take my signals from the hourly chart or the 4-hourly chart, looking for overnight moves. But today I couldn't resist going long above this 1, 2, 3 pattern. There's nothing much to it. There's the 21 period moving average. Market opened, gapped up, came back, and then broke that high. I believe there's people calling this and selling it for vast amounts of money, call it a pocket pivot, but it was called a 1, 2, 3 pattern. 1, 2, and 3 breaks up through the top of 2 and builds your proverbial uncle. So I went long. It was my book. I went long at 41, and I made a quick 10 points, and I took half off, and I brought my stop to entry, and I'm still long the other half at 58. So that's up 17 points, and my re-stop loss is sitting there somewhere, so I can't lose any money on the second half. going to do my best to let that run. I could add to that position later, although it's getting quite late in the day for me. It's 20 to 5 on Friday. If we have a look at the longer term chart that I'm happiest with, the short term charts, folks, unfortunately, the tail is wagging the dog. You know, you're sitting there all day grafting like a dog, trying to make some money. On the way up, I read this as I watched it go up the page here, folks, because I was looking for a short signal just about there, okay, from an upthrust. The upthrust had worked very, very well, and I just sat and watched that go up the page. I think this is from the low. This is probably 1, that's 2, this is 3, that's 4, and we've got this ascending triangle. Or diagonal triangle, as the Elliott wave people call it, and that's what in fact made me grab that 10 points quite early on, because this coming at the end of a 5-wave sequence is quite a bearish. The stochastic is up there, and it's in the overbought situation, and it's showing compound normal divergence. The price is rising, the indicator is falling. I think that if this fails, folks, invariably it fails, and it fails in some style, in that if a rising wedge fails, the price goes up the page pretty much vertically. So if we see a push higher here, then it can break this area of resistance. All the bears will run, and we'll get a huge run up. So I'm still in that, although I'm wary, and have been wary all afternoon, that we're at the top of a rising wedge pattern. Holding that long position, I see it's at 62 now, so it's going the right way. So not that much done this afternoon, but a few points in the bank, I'm glad to say. If we have a look at the short-term chart again, yeah, it's pushing up at 62 after a little bit of a bull flag in here. As you can see, we're above the 21 bar moving average, which is always a good place to be, and we're above the 55 as well. Oh, I didn't put it on. I can't stand charts that are cluttered. Just wary of that rising wedge on the hourly chart. That rising wedge on the hourly chart fails. This little fella's going to go up the page in a straight line. There are going to be so many people running away at the same time. The probabilities, however, are in the rising wedge breaking down. I don't know. I would have sworn 20 years ago that it was 80-20, but I don't think it is anymore. Patterns are not quite as reliable as they used to be. So if we have a look across the market, folks, the gold market looking very weak. It's it's oversold, and we had a little double price. The gold market fell. It made a double bottom. That's normally a very bullish pattern. The stochastic is rising, but look at it. It just can't get anywhere at all. Just can't get anywhere at all. And in fact, it's starting to chart a little bit of a bear flag. So I wouldn't be at all surprised to see that break down. So that's quite disappointing. I haven't got a position. I had a position, did well there, and I had a little bit of a position I got out of it entry, and I haven't got a position at the moment. I was in fact very interested in buying into gold this week on a spread bet, but I didn't get a signal. And the oil market is darned interesting, because it would seem to be still holding at the support level. I've drawn in this trend line as best I can, and it motored down, and certainly for people trading the oil market on an hourly chart or a 4-hourly chart, there was a great move down. The stochastic, weekly stochastic, which has stood me in very good stead over the years, is still showing this bullish divergence here, and the level is still holding. I haven't got a position because I haven't seen anything, a reversal today of any with any pattern to it that I trust. But if that was confirmed on the long side, I would certainly be interested in a long trade here. So support is still holding. If this support breaks, and one of the curses of technical analysis, you never know when it's going to break, and when that's just a test of the support. For the moment, to me, this move down was just a test of these levels. If it does break, then there's $60 saying hello to this thing very quickly indeed down here. So a lot to play for in the oil market once the direction is known. I suppose the people who trade the options market can play both sides of this. As soon as it makes a decision for us, it's going to be a move one way or the other. Let's see if I can get the daily chart up there. It's the daily chart. Need to do a bit of rescaling here, but maybe on Monday, stochastics right down in the right place, as you can see. There is my fib levels. Just get rid of that. God, I hate cluttered charts. But that, I think, would be qualified as a morning star candle pattern. Oh, I'm no great expert in candle patterns, but this could be a very interesting long position come next week. So much quieter week than I thought after the Labor Day holiday. Much quieter. A bit of action on the forex market around the euro dollar, and I'll do my best to cover that next week. So quite a quiet week for me, and this is still sitting up around that 59 level, and I shall give this a little bit of legs, but I am wary that if this is a 5 up, that's a very good sign, folks, but it can quite easily come back to 62% of that, certainly well into the range of wave 4, which would bring it down 100 points, and that would be a very nice trade. I don't see it happening today. The market looks quite steady up here. I hope that helped. I hope it didn't confuse you. Until you're making money on the S&P, trading an hourly chart or a 30-minute chart, leave the 5-minute stuff, folks. As I say, I normally only go there when I'm feeling a bit bored. Thanks very much indeed.